Welcome to the Innovators and Investors Podcast. I'm Kristian Marquez, founder and CEO of Finstrat Management. At Finstrat, we provide CFO-led accounting, finance, and reporting services to assist clients monetize their business. Stick around to the end of the podcast and I'll share how you can be our next guest. Now on to the show. Hello, and welcome to another episode of the Innovators and Investors Podcast. I'm your host, Kristian Marquez, founder and CEO of Finstrat Management. Really excited because with us today we have Cindy Padnos, founder and managing partner of Illuminate Ventures. Cindy, welcome to the podcast.
Thank you. It's great to be here.
Why don't we start with Illuminate Ventures? We'd love to know the investment thesis.
Sure. So Illuminate is a seed stage investor in the enterprise or B2B software category. We've been doing this now for a dozen years. That's a little hard for me to believe, but we started as one of, frankly, the first seed stage firms that had an exclusive focus on enterprise software. We actually have a very specific set of lenses that we apply when looking at companies that we think are quite different from most investors that I'm happy to share with you. But overall, it's seed stage enterprise software.
So what is it about? Let's start with enterprise software. Why are you bullish on it?
What am I bullish on today?
Oh, no, just in enterprise software in general.
Oh, that's almost a no-brainer, because if you look at my background and you look at the background of my partner, Jennifer Savage, we have spent our entire careers in the enterprise software category. And I think if you're going to do seed stage investing, it's super important that you invest in what you know, what you understand, and where you can potentially add the most value. So Jennifer and I are both operators by background. We actually first met the B2B very early SaaS software company that I was the founder and CEO of. It was a procurement software company, and Jennifer was my VP of products. I was the CEO.
Fantastic. And so, man, there's a whole bunch to unpack here. Why seed as compared to Series A or later on in a company's growth cycle?
Yeah, it's a great question. My own background included a number of years in management consulting before going on to become an operator. So in some ways, from that experience, I suppose I could be a good fit for later stage investing as well. But my passion and my hands-on experience is really as that startup operator. And Jennifer, similarly. So I was early at 3 or 4 actually software companies, 2 of which we took public. One was acquired in an M&A and the other was an outright failure. So I think, interestingly enough, and Jennifer similarly has an amazing track record as an operator. She was my VP of products. She was the senior leading product marketing at DocuSign, at Smartsheet, FlowRoute. Again, 2 more IPOs and 2 more M&A exits in just a relatively short amount of time. So it's that operating background of taking companies from the earliest stages through product market fit and then acceleration that both of us have hands-on experience doing and that we love. It's that simple. You could invest at later stages, but this is where we believe we can have the most impact.
And it makes great sense, especially if you think about all the options that limited partners have available today. To have an investor like yourself who has an operating background, I share your opinion, very powerful, because you've been in the trenches, you know how difficult it could be to bring a company to life.
I think something I learned along the way, Kristian, I'd love to say I knew this going in, I didn't, but what I've also learned is that the returns that you can achieve at seed stage investing are enormous, and they are at a higher level of probability. It's at the simple math. It's the law of numbers. It's no different than saying, can I get a 2x return on a house I pay $250,000 for more easily on one that I pay $5 million for? Probably yes. And it's true when you're talking about moderate, appropriately sized seed funds relative as compared to growth stage $billion funds.
Yeah, with reward potentially comes commensurate risk. And I'd love then if you can, we can go on a tangent briefly, Could we focus on your time as an operator? You can go in a little bit of details on the procurement company, what that was like, key insights that took away that inform your decision-making process today. That'd be great.
I was an operator in a number of different companies, but in the one that I founded, obviously, I learned so many lessons, and many of them the hard way. As simple as the fact that while you're CEO, you still report to someone, and that's your board. And so learning how to work with a board and manage a board, and really you do have to manage them. And it's a skill, and it's a learned skill. So I think that was part of it. I would also say a huge learning and a hard one was when it came to people, don't settle. No matter how long you have to delay that hire, don't take someone who isn't really going to be the very best that you can find. And the answer in startups is really simple. You have so few people that you have the budget to hire, that if you make a misstep on one of them, then really everyone who comes after them, everyone they recruit, is also going to be a misstep, more than likely, right?
I would agree with you 100%. It's my experience as well. And I'd love to know, so you're doing due diligence. To what extent do you find that most founders are amenable to this idea of, hey, your team is everything, regardless of what your product or market like?
I don't think all founders think that way, but I will say that Illuminate founders think that way. When we find the right kind of founders to work with, as an example, I just got off a call today, just a few minutes before this, with founders who have bootstrapped their company to almost 2 million in recurring revenue. But they started as an IT service business, and they want to and they have spun out this company and platform as an entirely separate business. And so because of that, put all of their own time and money into building it to the stage that it's at today. When you ask them what's most important to you, despite the fact that there's a lot of technology underlying this platform, their answer is the team. It's the team. And it's ridiculous perhaps, but we were talking about this at a level of detail where it became clear how much they cared, because a big portion of their team is in India. And they were talking about how during COVID, they found a way not just to get vaccine to those people, but also to invite their entire families to come and receive vaccinations. That wasn't just being done by most organizations there.
Yeah, I have two daughters, and one of the things I enjoy, I've said to them numerous times over the years, is watch what the boys do, not what they say. All right, it's actions speak louder than words, and I love it. You can say that I'm going to breed a culture where we take care of people, but actually extend that to your immediate loved ones.
That's right. Yeah, it's a big deal.
Big deal. Sounds like you're bringing a tremendous amount of insight to Illuminate's portfolio companies. Would love to know what other support now that you find yourself typically engaging in.
So from day one of the firm, we knew that as a small organization, that just two partners couldn't deliver all the support and resources that our portfolio would need. So we built what we think of as a platform of resources, two really big and key components to that. One is the group we call our Business Advisory Council. The other are our student interns. We call them students in residence. It may be hard to believe, but we've had more than 125 now students graduate through that program. We have 8 to 10 a year. They are students at the top MBA programs in the country. Our second year students recruit our first year students. So these are not summer interns, they're during the class year, and they're extraordinary. They help us directly with due diligence. They help our portfolio companies with everything from competitor assessments to helping them draft content to just everything under the sun. They're super talented. They're at schools like Carnegie Mellon and Berkeley Haas School and on. And the other element, and by the way, they, even after they graduate from our program, they're still scouts for us for deal flow in all of these companies that they go to work for. And most of them, of course, are interested in tech, or they wouldn't have wanted to be doing an internship with us to begin with. So it's super interesting. The other and really powerful element is this Business Advisory Council. I started that from day one of the firm, and it really was designed to emulate a similar group that I had when I was a founder. I had a small business advisory council. I think we had 6 or 8 people on it, and they were not there to just coach me and mentor me and provide me with input and advice. But I built the group in a way that they could support all of our team, all of our executive team. So we had, for example, Mike Stonebreaker, who had invented SQL, was there and could be, and he'd been a founder of Ingress software company. And so he was an entrepreneur, but a technologist and just brilliant. He was an advisor to our CTO, not just to me and not just to the company. So when we set out to create a similar group for Illuminate, we had a similar strategy. We said we want to bring in people who can support not just our firm, but our portfolio. And so that meant we identified various different types of people, everything from entrepreneurs to attorneys who had taken hundreds of companies public, to people who were running organizations that did even pre-seed or mentoring of startups, all sorts of different types of people. That group today is 45 people. Across them, they sit on over 100 public company boards, and they've sat on more than 250 private company boards. So they are extraordinary resources to us. Most of them are also LPs in our funds, those that don't have a conflict. So they have skin in the game. Some have taken board seats in our portfolio. A number of them have referred deals to us that we've actually invested in. And they do customer and partner introductions almost continuously. They have due diligence. I like, it's across the whole spectrum.
So student advisory, many students are in our audience today. How can they throw their hat in the ring to be considered for the program?
We only recruit once a year. We do that in the fall, and we do it at all of the, not all, I shouldn't say it, at a handful really of the top business schools around the country. We make exceptions. We've had a student from the Darden School. We've had ad hoc students from a number of places, but typically we have had students at Wharton, Chicago Booth, Carnegie Mellon's Tepper School, Stanford, and a couple of others.
Fantastic. And then as it relates to the business advisory, so the program and the structure sounds phenomenal. Now that you've accumulated over a decade of witnessing founders engage with this group, I'd love to know if you've seen any patterns of how the most successful founders are leveraging that type of expertise.
Oh, that's a good question, because they don't all do that. You're right. You're right. We encourage it, but it takes more than encouragement. So one of the things that we did is we created a map, if you want to think of it that way, of which of the members of our advisory council have skills in what areas. And all the way from technical skills to recruiting and HR skills across the whole board, marketing, product-led growth skills, etc. And so with that map, we're able to, hand in hand with the founders, identify the people who might be the right fit for whatever question or support they're looking for. In terms of those founders who do it well, and by the way, I think they're the same ones who tap into our networks, personal networks. They're really not only proactive about it, but they provide us with the tools that we need to make it easy for us to do. Meaning they write the script and say, here's the email to send to Sarah Fryer, who's now the CFO of OpenAI next week, who's been an advisor to us for 10 years. And I just put my personalization on it and off it goes. So they take the time, to be honest here, to make it easy for us. Or if they're asking Claudia Fan Muntz, who's a venture partner at NEA now, but was the head of IBM's corporate strategy group at the time when she first joined our advisory board, if they're asking her to make an introduction, then they're scripting something for me to send to her. Its package is ready to go, and things actually will get done.
That makes great sense. And to a degree, you would hope that most people have enough wherewithal to understand how busy everybody is. And if you can make it easy for someone, odds are higher that they'll be in a position to be able to follow through and make good. So it makes complete sense.
It does, but in fairness, I'm not sure there's anyone busier than a founder.
There's a tremendous amount of truth there as well. You and I wholeheartedly. I'd love to talk about, we had a chance to chat before we started the podcast, and I know one of the things that's really important to you is diversity. Would love to get your perspective as to why that's the case, and maybe if you have any examples that are top of mind where you see the power of getting different perspectives, that'd be great.
My passion for diversity goes back a very long way, and I think it probably goes back to being a kid growing up in a family where my father would literally call my sister and I his girl boys. Okay. That meant we had to do all the same work the boys did, by the way, and not unlike what you said earlier about saying to your daughter, watch what the boys do, not what they say. And I think my father was a great coach and around some of those kinds of things as well. I had a grandmother who was an equal partner to my grandfather in a very industrial business. So I grew up in an environment where I didn't know there were really barriers. And then, of course, stumbled upon them as I got into my early career and saw that they were real. As a founder and CEO of a company going out to raise capital, despite the fact I had been part of taking another company public, I had a master's degree from Carnegie Mellon, I had undergrad at Michigan, I had all these check marks. It was very hard to raise capital in the midst of the bubble when a monkey could raise capital. Okay. So I learned from that there are differences in people's networks, in people's self-confidence, in a whole variety of things that can hold people back, but that those people had so much to offer. They had so many interesting different viewpoints and skills and abilities, and they looked a little bit different than the norm. If you step back and you look, when I started Illuminate, it was right after the last financial crisis. We had gone through 2008, we were partway through 2009, and I took some crazy beans and said, I'm going to go start a venture capital firm. I would say that actually, the lack of capital being available to anyone in some ways leveled the playing field to a certain extent, because I wasn't competing with a lot of other people for capital. It didn't exist. And so instead of raising capital initially, I wrote my own checks. I started building a warehouse portfolio of investments that I could then demonstrate what was possible. And my philosophy from day one was, that's it. I'm going to create a level playing field. I'm never going to give anyone a hand out. I am always going to give them a hand up, but only if they deserve it, and only if they meet every criteria of what we're looking for. And lo and behold, we've ended up across the years now with 36 or more investments we've made. 90% of those have diverse teams, and nearly half of them have a woman as one of the co-founders, which we're obviously very proud of and very excited about. But it really was my experience of having been frequently the only traditional person in the room that caused me to realize it's not, frankly, just about being a woman. You could be Black, you could be Latino, you could be anything that wasn't traditional. And when you step into that room, you have an opportunity to bring a new viewpoint and a new voice.
And is your opinion that a lot of times these are just unconscious cognitive biases that people are bringing to the table, as to not take a woman as seriously as a man?
So I would say 100%. Well, maybe that's not fair. Maybe it's 99%. There are a few people out there that probably just fall into that other category. So one of the things I did when I started Illuminate was I started writing what's now a series of 3 or 4 white papers that look at the impact and the opportunity for diversity in the tech ecosystem. The second one of those that we did was very much research based. We went out and we asked some very interesting questions of both entrepreneurs and VCs. We asked them what the most important criteria were, the most important personal attributes were of successful entrepreneurship. We asked them what the highest barriers were. So two things. And we asked the entrepreneurs and the VCs the same question. And we split all the data between male and female. I would like to split it by Black and Latino and other cuts. There weren't enough of them in our sample set, so it didn't make sense. But when we looked at it, it was fascinating. The male and the female entrepreneurs responded to a long set of questions almost identically. But when you ask the VCs the question, is a male or a female, what are the most important attributes first, stack rank them, and then is a male or a female more likely to display those attributes? In all but 3 of 16 attributes, they said the males were more likely to display them. Never having met the woman or the man that we're talking about as being this entrepreneur. And when then you ask them the other set of questions, which of these barriers to success is a male or a female more likely to find to be an insurmountable obstacle? Again, in virtually every one of them, the VCs came back and said the women are more likely to face these obstacles than the men. Okay. And they were things, I mean, one of the more interesting questions was the support of family. Having a family that says, go for it, go do it. We're here. We support this crazy idea that you've had. There were so many interesting questions, that the motivation to succeed and all of these other things. And it really, this is only about 5 years ago. It was very disconcerting to me to see the results. And we surveyed like 1,000 VCs and 1,000 entrepreneurs. These weren't small numbers. And all of those entrepreneurs were active entrepreneurs in the B2B space, because we had taken our pool of everyone who'd pitched us and used them as our target audience. It was super interesting. So I think it starts with awareness. And by the way, if you're wondering, the male and the female VCs answered almost identically.
Oh.
It wasn't just the men saying women face higher obstacles. Now step back and you say, now I'm an investor and I have this in the back of my head. And I've never met either of these two CEOs who's pitching me with the identical company and the identical pitch deck. Who am I going to write the bigger check to? Who am I going to take more risk on? The one I think faces more obstacles, or the one I think faces less obstacles? The one who I think is going to display more of the success attributes, or the one who's likely to display fewer?
But it's interesting, as I'm listening to this with my investor hat on, I can't help but think, though, that there's an opportunity to earn greater returns if I focus on female founders, because I'm not seeing multiples marked up like I would with a male counterpart.
Yeah, so we didn't chase after women founders. We didn't chase after giving them poor term sheets or anything like that. We chased after the best companies, but we've never let things like gender or age or their ethnic background or we've never let those become obstacles, right? So all we did was say, we want to remove the obstacles. And by the way, the result of our strategy over time has become a focus on what we call further along startups in the seed stage. Frequently, again, they don't look like normal startups of your typical venture capital firm. They have typically some background or history of the team having worked together, either in a large corporation or in an IT service business, and they're spinning out a SaaS company, or building a product that might have been a government agency product with SBIR grants that are non-dilutive, and then wanting to go commercialize it. There are so many ways that companies get started today without taking a lot of outside capital to get started. And those are the ones that we're looking for. When you find them, I think it's interesting. They look a little bit more like what my friends who do mid-market buyout see when they're looking at their deal flow. There are, for example, frequently more mature founders. I'm talking about founders who can be not just in their 20s and 30s, but 40s and 50s. They can be family member co-founders, which in the venture world is considered forbidden fruit. Don't touch it. Don't go near it. We have 3 companies in our portfolio right now with husband and wife team co-founders, one of which right now returns the entirety of our fund 2 at its current valuation, and the other 2 doing extremely well. So all of these patterns and stereotypes and expectations that other VCs have found to be successful, by the way, I'm not suggesting that those didn't work for them. They did. We've put them aside and said, no, we're looking for something a little different. And these further along companies sometimes have attributes that are different from the norm. But if they meet all of our other criteria, rapid ROI that's easily demonstrable, large growing markets, all of the other things that you would look for, then we don't let those things become obstacles.
That's great. And perhaps Illuminate's credit would be a good reason to invest in the fund, one of your funds. But I can't help but think, any resources are top of mind for founders that you can think of top of mind of how they can overcome maybe some of these perceptions as they're talking with investors?
You mean what different types of entrepreneurs that face different expectations?
Yeah, I'm thinking about maybe some of our female founders in the audience in anticipation of encountering some of these biases. Any tools or resources that you can think of to maybe
Well, I mean,
help break down these barriers?
sure. There are quite a few groups today that are focused on women's entrepreneurship. There are 2 that have been around even since I was an entrepreneur. One is called Astia, the other one Springboard Enterprises. Both of those run programs that help to train and educate and support women's entrepreneurship. But there are many of those today. I don't know that I feel like you need to raise your capital necessarily from a firm that invests only in women. I know for me, that's not what I was looking for. I think there can be value in that for sure. But just like I believe in the diversity of a startup being beneficial, I think the diversity of your investor team can be beneficial as well.
Sounds like great resources. We'll make sure we bookmark those in the show notes. But also really unique in that you started your own fund. I'd love to, if you can share with us just some of the key takeaways that you learned in the process for any of our aspiring venture capitalists in the audience.
I guess I'll just start with, I feel like the luckiest person in the world to do what I do, to have my own firm, to have the partner I do in Jennifer, to have a portfolio of founders that are as phenomenal as the ones we have. Even the ones that have failed, and yes, we have had failures. You can't do startup investing without it. They're great people. They are diehard, energetic, passionate people that this kind of opportunity is second to none. I love to learn. I learn something new every single day in what I do. I think I have to admit, though, I had no idea going in how much work building a firm is. I had raised capital for a startup. I had never built LP relationships. I had worked at another firm, but never raised a fund. And so the learnings of that process, I had never heard the word emerging manager. I know that sounds ridiculous, but it's true. I had never heard of the word pre-marketing. What's that? I'd been a VP of marketing, but I've never heard of pre-marketing. There were so many things to learn. I was fortunate. I had a group of people. Bob Gunderson founded Gunderson Detmer, Nancy Schoendorf, who was the managing partner of Moore Davidow at the time, and Cliff Higgerson, who founded 2 or 3 different venture capital firms. They were my kitchen cabinet. And I'll never forget sitting down and meeting with them and talking about how I could get started. And I had seen that another firm, very successful firm, had done this warehousing idea. So I threw that out there. Bob Gunderson says, brilliant idea. Nancy Schoendorf says, you could do things that way, but you might want to raise some outside capital. And Cliff Higgerson, who's the one who had founded multiple firms himself, said, it's the only way you're going to get it done.
Yeah.
And Cliff was right. At the time, he was right. Back in 2010, he was right.
Aspiring VCs take note. It's intuitive. if you're an emerging manager and you need to have either a track record or some validation that you can be responsible with other people's capital, makes all the sense in the world.
Well, I had a track record, but people would call that an emerging track record. It turned out that the 4 investments that I have attribution on from the prior firm that I was with ended up with 2 IPOs, a great M&A, and 1 outright failure. Okay, so I experienced everything, but in enterprise software, that kind of track record only gets solidified after 5 or 7 or even 10 years. It doesn't happen overnight. And I was there just 5 years in to my quote unquote venture investing career, maybe 4 years in. And so the only one I had was I had the 1 failure and the 1 M&A exit. The 2 IPOs hadn't happened yet.
Another thing I'd love to know is what have been some of your success stories? You've been going at this now for over 10 years. I got to imagine that you've been fortunate just to see some really great companies.
Yeah, we've had, thanks for asking, we've had some amazing stars, rocket ships in our portfolio. But when I say rocket ship, one thing to keep in mind is in the enterprise space, you don't build a company from 0 to 100 million overnight. These are SaaS recurring revenue companies. Companies like Exactly was our first IPO. I'm super proud of that. Not only did they go public, but then shortly thereafter, they became a target for acquisition by Vista and became one of their platform plays. And that CEO stayed with Vista for a number of years. When he left and came out to be part of another newco, we became his investor there. So we have a twice around CEO there. Second similar situation was a company that founder's company was acquired by Cloudera. It was a company called Sense Platform. And after a few years at Cloudera, he left, and now we're investors in Continual AI, his new company as well. So that cycle in our industry is pretty great. Our second IPO was Coupang, which was the second largest IPO of the year in 2021. Our company that had merged 8 years earlier with Coupang, the founder of that company had been the VP of engineering in the company I founded. And yeah, so he, Jennifer, and I all worked together there, which is a fun fact, if you will. And that company ended up delivering a nearly 10x return on invested capital. So we're delighted with that. And then more recently, we've had some companies that went from 0 to nearly $100 million in recurring revenue. One of those is BrightEdge, market leader in search engine optimization. Another is Content Stack, which is a total outperforming company that so well meets all of those investment criteria I was describing to you. That company has increased revenue more than 6-fold in 6 years. And I should say, start over 60-fold in 6 years. And they are just an incredible rocket ship. They'll be the next unicorn in our portfolio.
Wow. Super impressive. As many of our listeners know, achieving an IPO is a material feat. It's not something that happens often. Generally speaking, early stage companies are getting acquired, like you pointed out. Tip my hat. Being able to consistently find companies like that is a really impressive feat. Great job.
Thank you. All right. You notice I stemmed.
Got it. Your perseverance paid off. Congratulations. Before we wrap up, if you could go back and give yourself advice when you first started off, what would you tell yourself?
This is advice, I think, to anyone starting a venture firm, if that's what you mean, that question is about. Find an anchor.
Okay.
Find the anchor, even if it means you have to delay the process. Because for us, I had not brought in an anchor until the final close of the fund. And then we had the good fortune to be introduced by one of their other LPs to, I guess they're one of the top 10 largest foundations in the world. And we just hit it off with them. We actually reopened our fund to bring them in. So it was really the final close. And then, of course, they became the anchor for our next fund. And we had the good fortune to have a wonderful relationship with them now in our third fund as well. But an anchor can be so helpful. from a credibility perspective, from a self-confidence even perspective in every way.
Any guidance in particular you'd give to another investor for purposes of securing an anchor?
You have to have an introduction. Knocking on doors probably doesn't work, or at least it's a lot more challenging. So finding the right introduction can make all the difference in the world. I know it did for us.
Got it. Fantastic. Cindy, this has been a great podcast, a whole host of wisdom in here. I know our audience is going to appreciate. That said, if there's anyone who wants to get a hold of you, founders, potential LPs, how can they do so?
Cindy@illuminate.com.
Perfect. Cindy, thank you so much. Really appreciate your time and making yourself available to our audience.
My pleasure. Thank you.
And that's another episode of the Innovators and Investors Podcast. Again, I'm your host, Kristian Marquez, founder and CEO of Finstrat Management. Thank you. Kristian Marquez here. Thank you so much for listening to the Innovators and Investors Podcast. If you're a successful founder or an investor who would like to be on the podcast, please visit podcast.finstratmgmt.com/podcast-guest. If you've got something out of this interview, please share this episode on social media. If you know someone that would be a great guest, please tag them on social media to let them know about the show and include the hashtag Innovators and Investors. I'd love to see your posts and suggestions. We're regularly putting out new episodes and content. To make sure you catch each new episode, please subscribe to the Innovators and Investors Podcast. And your thumbs up, ratings, and reviews go a long way to help promote the show, and it means a lot to me and my team. Would you like to know more? Go to our website, finstratmgmt.com, or follow us on LinkedIn or on X. Our handle is @finstratmgmt. This is Kristian Marquez. Thank you for listening. Until next time.